Hello, everyone. Don Garman here from Mirador Capital Partners. We're here, of course, with Jonathan Ting, our Director of Research, and we wanted to check in with you because we're getting here into a little bit into the heart of earnings season, although I think it started last week. Well, it started in earnest last week. So anyway, just wanted to chat with Jonathan a little bit today and see what, if anything, has caught your eye. And then after that, I have a couple things that I would like to discuss. And we haven't talked too much about it, but I think it'll be a fun little exercise to go through together. So, what's on your mind this week, Jonathan?
Thanks, Don. So the earnings season so far we're still pretty early, but it's been a mixed bag. We're really hoping to get some visibility from the CEOs into how they see their company forming over the next couple quarters. Because last quarter, no CEOs gave any guidance; they didn't know what was going on. But now, with a clearer sense of what steps the government might take, some of the shutdowns that have happened, some of them have a better view. But it really has, like I said, been a mixed bag depending on what sectors you're looking at. I mean, if you're looking at the hardest hit ones, still like airlines, those CEOs are still trying to wave the red flag. I mean, they're saying pretty drastic statements like, if airline volume doesn't double in 3 times in the next few months, we're bankrupt. They're saying things like that. And then we're seeing other industries like oil. Schlumberger just reported yesterday, and they're announcing additional layoffs of 21,000 employees. But if you look at some of the better sectors like software, for example, Microsoft reported, and they're beating. A lot of the cloud software stocks are doing really well. But what's interesting is, even though they're beating and they're raising their guidance and they're doing well, their prices are still coming down. So that might be a question of, how much was already priced in, and how much of the future we've already bought to date. But we'll keep an eye on the other companies as they come out. I do want to share one chart if I can.
I was going to say one thing about the airlines, which is, even though the equities are trading, however the equities are trading, the bonds are trading terribly, right? Credit default swaps, the debt is just it's trading poorly for equities that are kind of still, flying a little bit. So
yeah,
we're always looking to the bond market.
Yeah, it's a tale of two assets right now between what the bonds and stocks are saying. Yeah,
one of them is very wrong for sure.
Yeah, one of them is very wrong.
Okay.
I can't share my screen right now for some reason, but it's okay. I'll talk through.
Let me do this.
I'll just talk through what I was going to say. Is that one of the things we track is the number of companies that are beating on their EPS or versus missing versus on their sales and whatnot. And if we look back into prior recessions into 2000 and 2008, we can see the trend move very clearly. During times of recessions, the number of companies that beat their estimates just crater. Maybe only 10% of companies are able to beat their estimates. But now, as we're entering the worst recession since the Great Depression in 1929, over 60% of companies have so far beat their EPS estimates. And that's probably, going to hold through. So, everything that the Fed has done and everything that the government has done to put money in people's pockets and, keep these businesses alive is really showing in the earnings this quarter. And going back to what I was saying about the industries that have been hit hard, we can look at airlines and the oil industry and say, well, they're a one-off. They're hit particularly hard, so they may fail while the other sectors do okay. Or you can look at it another way, which is, actually the airlines and the oil industry was the first to get hit. And if we aren't careful and we don't plan out what we're going to do next, those red flags that they're waving, are going to bleed into other sectors like software. Where LinkedIn just announced that they're laying off 1,000 people. So that's something we're looking
at. So I thought it would be interesting to talk about something, and I would say it would foreshadow some things that we may be looking at in the next weeks or months. So tell me if you can see that screen.
I can see that, yes.
Intel. Yeah, so yeah, and we talked about this a tiny bit a little while ago, and I thought I would bring it up in the context of the difference between a good company and a good investment. So those of you who have been around, and there are some of you who have been around since the tech bubble and before, where, we can call this Internet 1.0, where we had the 8.6 architecture that Intel, had pioneered, and we were all buying PCs in the run up to Y2K, and we had to upgrade our computers because we were going to lose everything when the clock rolled over to the new century and millennium. And from 95, so what I put up here for anybody who wants to really tune into this is the price chart of Intel stock in blue. And then down here is the market cap. A market cap is just the value of the entire company if you were going to buy the entire company. And then the white is the earnings per share. So that's the measurement, of course, of how much profit a business makes, on a per share basis. So I don't want to make any bold comparison to today, but I think when people are talking about some similarities, you can look at things like the run up, because now we've got this sort of cloud SaaS migration from on-prem to the cloud, which is obviously, call it Internet 2.0 or 3.0 or whatever version of the internet we're on. Mm-hmm. But you could see this run up here of Intel, starting, call it 92. I think they went public in 90. And, but I think it's interesting here to look down at the market cap and look at, 125 here in 97 and 150 in 98 and 233 at the beginning of 99 and 250 September of 99, peaking here at $502 billion, August of 2020. I thought this was interesting going up here. This is captured on your screen. That's July 31st of 2020, right? So that would be 20 years ago. And you can see the price there of 66.75. Why I brought this up today is over here on the right, they reported they're pushing out their 7-nanometer chip production for a year and talking about outsourcing some of it, and the stock is $50. So that is, no one would argue, maybe somebody today is arguing they're not as good of a company as they were last year or last month or last week, but no one's arguing Intel's not a good company. And they were saying the same thing mm-hmm. back then. It's a great company. And we acknowledge and have acknowledged all along the way, it is a great company. But notwithstanding the fact that market cap wise, that great company, which was $502 billion in August of 2000, hit $100 billion of market cap. That's 103, January 31st of 2003. So anything that went from 500 to 100 in a 3-year period was not a good investment, even though it was still a good company. So, and all the while, the earnings per share, obviously chopped along here during the financial crisis and whatnot, but then obviously has steadily grown over the last several years, even while the market cap is kind of stalled. So I say that only because, and I said this on Monday, there will come a time when even the great companies that we now own, that we all collectively believe will inherit the earth in all of its forms in the future, because they're just so monopolistic and powerful and impressive companies in every way. I think you pointed it out. We are all bound together, and any company is going to be constrained by global GDP or US GDP plus productivity. It isn't like, there's many ways to say it. Trees can't grow to the sky, and eventually, you're going to need customers, and you're going to need new markets, and you're going to need new ways to generate not just growth, but earnings, right? Because those ultimately need to get reinvested to create more products and more earnings, or else you have to raise money somehow. So um, it's, to me, it's good. It's a good reminder that not all good companies make good investments, and that eventually prices do matter. So it's a good lesson in these times to just make sure that we're not ignoring some, the laws of gravity of our industry or our business. So, does you have anything you wanted to add to that, or anything you want to say?
I would just add that I completely agree with what you're saying, and it's clear that that as prices have diverged from fundamentals, because I listened to Intel's call yesterday, and actually it was really good. They beat on the top and bottom lines by good margin. They increased their guidance for next quarter and next year. And the only real thing was that they delayed their product. I mean, if this happened in 2016, 17, the stock would have still been up 5%, but instead it's down 15. So really the market's looking for a reason to go down, and the narratives are shifting away from fundamentals. So you're right, there are different forces at play when prices are this high. So
yeah, and so that's why people have seen things come into the long view strategy, which we have not seen in years, right? Since 2011, in fact. And so we do think that there's an opportunity to rotate into some things that have been out of favor for a long time, do represent maybe a little bit more safety or a slightly different view of the future, and offer some protection in what could be shifting winds. So I will leave it there. Any parting thoughts, or shall I wrap it up?
I'm good. None for me.
Okay, good. So we will check in again next week. Another full week of earnings, and I'm really thrilled, as I've said on Monday, with how things, at least from our side, are holding up, despite some, I would say, chilly winds from a different direction. So anyway, we will navigate the landscape, whatever it brings. So have a good weekend, everybody. Hope you enjoy some sunshine, and we will look forward to checking in with you next week. Bye.